Give me 1 second. All right. Okay, we got sound. We got sound. Pretty cool. All right, we didn't have sound on the YouTube, but we do have sound now. Perfect. Okay. So again, team, thank you so much for being here. All right, so let's go look at the market, right? What's going on here? Okay. First Qs, okay. We ran right up to this again. Well, let me pull up a different chart so you can see where the 200 is at, right? All right, this is okay. There we go. Right. This red line here, let me make it thicker than a Snicker. This is where the simple 200 is. Let me make that a darker red. Right. Oh, that is as dark as it's going to be. Make that line really thick. Right. And today we close just under the 200 today. Right. And so I will say that this chart move has been pretty strong. I would even say it's been mighty strong. Right. But is it sustainable, right? Do we kind of like come down here, bounce, and make all-time highs? I would say no. I would say no. I would say that I feel like we could come down from where we at right now in the Qs, 367. We come down to 359, 353, or 344. In fact, my next target on the Qs would be the 8, and then the 34, and then the daily 50 at 345 before we could kind of decide where do we want to go, right? What's so wild about this move is that absolutely nothing has changed in the stock market, right? If you want to look at some of the metrics here, the 10-year treasury, which should move kind of inversely to growth stocks, right? 10-year treasury has been screaming up. It's pretty much at pre-pandemic highs here. As you can see, this is, this is 2019 over here, right? This is 2020, right? 2021 and 2022, right? And so we're right at pre-pandemic highs for the treasury yield here. And man, the market again just had like a mega bounce, and mostly to do again with just a massive short covering rally, right? We came down here. Made a triple bottom on the Qs, and we bounced like a devil, but a lot of the big charts are still, just in bearish territory or just slightly out, right? So let's talk about some good news, right? Let's talk about the best charts in the market, right? For that, and we've talked about it before, right? Let's talk about Apple here, okay? Again, if you want to be bullish the Qs, right, you got to be talking about Apple here. Apple has multiple squeezes, right? And what a squeeze is basically the indicators are, or you could say the chart itself is gathering strength. It tightens up and it releases energy. That's a pretty very simple, basic way to describe what the squeeze is, right? And so again, we came right down here to the weekly 21. We hit the 150, which is also corresponds to Apple's 200. Apple pretty much doesn't typically hit or go under its 200, and so we figured that we get a test there, that we get a bounce, and we got the He-Man bounce of a lifetime, right? And so Apple is spitting distance with an all-time highs. What's really great about Apple as well is it's one of those charts, it's one of those companies, right, where people are speculating that Apple is going to be inflation resistant, right? Analysts, I should say, not people. Analysts believe that regardless of how high inflation gets, okay, people are still going to be buying iPhones, and Apple's just going to be able to pass the cost off of their phones to their consumers, right? And so Apple's getting a nice bounce. Let's take a look at another really great chart here, and of course, it's Tesla, right? You talk about a chart that could squeeze. Well, Tesla is the squeeze daddy. I mean, my goodness, right? As you can see, anytime a squeeze fires here, we just get a nice big bull run in Tesla, and this is like I would say that this is like the third mighty bull run in Tesla, right? And it's got a nice big broad cup and handle here, and so Looking for Tesla to go up there and test 1150. That's our next price target on Tesla. We had positions in Tesla. We were, you know, consistently just kind of flipping them back and forth in Tesla, and so that's great. And so yeah, so that's Tesla there. Another great chart that you folks should be taking a look at here is going to be Google. Okay, maybe not as strong, right, but definitely within the previous trading channel, and it's just insane how high the 200 has come, right? And again, we do have a death cross here as well, and it's just wild. It's wild for something to be within spitting distance of its 200, I mean of its all-time high, while the 200 is it's just over its 200, right? I'm sorry, I screwed that up. It's wild to see a stock that has had a death cross recently that is simultaneously very close to its 200 and not too far away from its all-time high, right? That just expresses like how wild the market is, right? It's a lot of liquidity being thrown around back and forth, and these algorithms are going crazy. These stock market charts, they're moving like penny stocks almost, right? Even in a day's time, right? Like, look at the price action for today, just in the Qs, right? Let me just go to the Qs here, and me get a. I didn't want a 1 minute chart, but you can kind of see it here, right? We open up here at 9:30. We hit the highs at 370, come down, made lows, right? So up here, so you see this box here that I made? Okay, this is it's not a supply and demand zone. This is more of a range, right? Where, let's say above the range is bullish, below the range is bearish, and we kind of went above and below the range a few times here, okay, before we kind of broke down and we kind of stayed down, right? And so there's like a lot of things going on here in this chart, and it's very choppy, and it's very it's very easy to get chopped up, right? Especially if you're just looking for more of a directional trade. And this chart just perfectly epitomizes really how wonky and how really choppy and violent the market is and could be. And what's so crazy about these moves in the market, right? We're having violent moves. Let's say $3-4 intraday swings in the Qs here, going both ways, while the VIX is just under 20 here. At one point the VIX was as low as 1876, which was you could say a yearly low for the VIX here, or close to a yearly low, and just gyrating back and forth. And so there's a lot of craziness happening in the market, right? So, but the number one question is, what is going to happen next, right? Well, that's what we're here to tell you. Based on this daily chart, right, we need to have a pullback. I mean, I think we're getting a little bit exhausted up here. And I would look to see, again, we are under the 200 here. I mean, this could be a very good place for, to potentially start to build up a short position. But this market is making its bones by popping the shorts, right? And so, for me, we closed under the 200 here. I'm thinking that shorts kind of came at this level. So if the bulls really wants to aggravate the bears, right? They would just need to get past. I can't call this max pain, right? But if we could close above 371 or 371.73 by Thursday or Friday, they would have effectively just punched the bears in the face for a third time, right? So we do have two alternate scenarios, right? If the bulls are able to kind of get over this 371 handle, they can pop the shorts and then make a push further higher for 375 or 380. If the bears are able to keep the price submerged under 368.55, then we could absolutely see a retest of 360 and 351 here on the Qs. Again, there is a lot of momentum behind here, so I can't really say that these things are going to get crushed, but my guess is that we'll probably get a little bit of a pullback. The SPY chart is even crazier than the Qs, right? Because with SPY, not only we just broke above the 200, we barely even had like anything to do with like a retest, right? And so, oops, sorry about that. So basically here, as you can see from this chart, we broke well above the 200. We had a little retest and we just bounced higher, right? But I could tell from some of these indicators that the chart is weakening. So look for a retest on SPY, back to 452, back to 448, and so forth and so on, right? And so the question is, hey, you know, how far back will we pull back? It's really hard to tell. You know, there are arguments for a full pullback and retracement all the way down from where we are to 440, 420, and ultimately like a retest of like the potentially 400, right? But it doesn't have to happen that way. You know, one thing that I will say is that all of the underlying factors that made the charts look like this anyway, none of those things have changed. But there is some bright spots to consider, right? We do have earnings, okay? Some of the noteworthy earnings are going to start rolling out next week. For instance, we have Roku coming out next week. We have Zoom coming out next week. We also have PayPal, right? So we are rolling right into another earnings season. Something else to consider. Typically speaking, the months between March to May, June are seasonally bullish, right? And so there is that to consider, right? And so that's what we have in the market. So team, that's all that we have for you today, right? So I don't believe that right now is a good place to start loading up on anything in the market. I think we should just like let the market kind of decide what it wants to do with itself. Again, we are at a major inflection point, and the market could kind of go either way, right? And so I think if you're new to the market, it's just probably best to just stay on the sidelines and let the market does what it do. And from there, hey, you know, hopefully something good could happen. But anyway, again, this is Charles Becco from Brooklyn Traders. I'm going to see you again soon. We'll probably put out another video by Friday. All right, team? Thanks, and God bless. Take care, everybody.